Hello and welcome to my Hargreaves Lansdown Stocks and Shares ISA update for November. In this video we'll be looking back at how my investments performed over the month of October and what the big financial headlines meant for my money. I'm sorry for the gravelly voice in this one. My kids very kindly shared their lurgy with me. Thanks kids. Hopefully my voice will make it to the end though. If you're new here, then this is a monthly series, so if you want to see any future episodes or any other of my content, then please hit that subscribe button. Thanks. So let's take a look at how the markets fared in October. This year's been pretty bleak in terms of market recovery and future prospects, but I'm sure things must be on the up by now. The UK economic growth is looking weaker than a malnourished smurf. With interest rates on long-term government bonds being hiked, it looks like the high rates set by the Bank of England to curb inflation could be set in for the long term. These high rates, as we've looked at before, will have a knock-on effect on most businesses as they have to factor in higher rates on future debt and less available cash flow, for example. On top of that, it's a double blow, as it generally means less disposable cash for the average person due to high remortgaging costs or higher repayments on loans. This means the public are less likely to go on a spending spree or are more thoughtful as to what they buy. We're not far from the dreaded C word now. No, not her. C for Carey, by the way. I don't know her well enough to go full Billy Butcher on her. Anyway, Mariah's still being thawed out currently, but I think when we do see the numbers for Christmas spending, it will give a good idea at how the UK economy is looking. In the US, it's a similar picture again, with the S&P falling further. The outlook on the S&P 500 is positive though, with analysts predicting a potential 15% gain over the next year. The trouble though with long-term forecasts for me is that most debt is fixed for a period between 1 to 5 years. We won't know the full impact of these higher rates, if they stay high, until debt is refinanced at these higher rates. Last month I spoke about my fears of global conflicts, and that was just before the latest developments in the Middle East. This is still something I'm keeping a very close eye on. There's a lot of big countries now that could be dragged into these conflicts, and if America is seen as overstretched by supporting ongoing conflicts, China could seize their moment to make their move on Taiwan. This could have massive repercussions globally, and with all these tensions and the future still looking murkier than a Taco Bell toilet bowl, it's making investment choices hard. I still have my eye on quite a few options, but at the minute it's coming down to timing. I'm not trying to time the market as such, but at the same time I don't want to sell off existing holdings while they're in the mud. Speaking of those existing holdings, let's start taking a look at my portfolio. We'll start with income, which really won't take long this month. October saw no dividends for me and just 46 pence in the way of loyalty bonuses. That means my monthly average for dividends dips to £16.84 for this financial year. I do have a few dividends due soon, which we'll see in a minute, so hopefully that will keep the average up. Looking at my portfolio on the whole, it's dropped a hell of a lot. I'm about 4% down in total over the last month, which in real terms is just over £200 wiped off my portfolio's value. If you look at how things were looking last month, you can see all my positions are down except for Centrica. Now, I was looking to sell off Centrica last month, as it looked like all the gains had been seen there, and was hoping to use those gains to buy into something new. I'm glad I held on now though, especially as they've surged higher since the end of October. So at the end of October, Citi lifted the target price for Centrica to £1.80, up from £1.55, and reiterated its buy rating. I may well hold on for a little longer now, as what I'm looking to buy doesn't seem to be as volatile price-wise. What I nearly did pump more money into though is Rolls-Royce. The price dipped just below the £2 mark on the 20th of October, and I was very tempted to buy more. November will be a decisive month for Rolls-Royce, with an earnings report due from the company. Depending on the outcome of that, we could see the share price rocket. I think there's certainly potential here for the price to jump to highs not seen in a while for the company. With cost cutting still a massive focus for the new CEO, he clearly is on a mission to generate some big profits. I don't know if you noticed earlier, but one of my funds came with an alert. My UK listed equity fund from Aviva came with a note attached, basically saying the long-term manager of the fund was leaving, and Hargreaves Lansdown aren't familiar enough with the new one to put their faith in them. As such, they've removed the fund from the wealth shortlist. Now these messages can seem like a warning, which, yeah they are. They're definitely handy to know that it's something I need to keep an eye on. That's all I'll be doing for now. It's not a sure sign that I need to sell up. My emerging markets fund from JP Morgan has had a really tough year and has been pulling down any gains made from other holdings for a while now, but things could be a lot worse here. With wars and China's real estate crisis, things could have got really bad for these markets. Many analysts believe the reason they haven't is because a lot of emerging markets banks have increased independence compared to ones in developed markets, meaning they can react quicker with rate hikes, for example, to stay one step ahead of a catastrophe. This does give me some hope for the future of this fund, but I think I'm still a long way off seeing this one out the red. I'll run through my remaining funds briefly now. Feel free to pause for a better look. Let me know down below if you've bought into any of the dips in October. There are a few bargains to be had there. That's it for today. My voice just about made it through. I hope to see you next time. Stay safe out there. Peace.